Alright, there we go. There's the order executed. Just a simple 7 handles for a Monday, not bad. Very simple logic, very simple exit technique. This is all done live. It's not pre-recorded. Here's the trade I took after the fact. I'm not taking 5 losses and then showing you the one winner. I'm not using multiple laptops. We're not Zeusy, okay? We're not just posting everything after the fact and then asking you to buy my mentorship. I'm doing this all live in front of you, teaching you along the way, teaching you proper risk management, psychology, everything you need to know. Alright, what's going on, guys? Sitting down here to do a daily review after my Inner Circle private live stream. So we're starting here on the daily time frame as always, and as we can see, we have a nice little turtle soup run on buy side liquidity right here above this weekly swing high, right? And then once we do that, we create this daily swing high. So this candle's high, this candle's high to the left of it, lower high to the right of it, right? So daily swing high. Now going into Sunday, we'd be studying to see if we can hold this swing point and reach for this very high draw on liquidity down here. So this would be the sell side liquidity with this imbalance right below it, right? So let's drop down to the hourly time frame. And as you can see right here, long-term high formed. So this is our daily swing high. And then we go into Monday here, right? You can see that we came up here and then we switched to ES quick, and we can see that ES actually swept this weekly high here while we actually failed to do so here on NQ. So that would be our SMT divergence. We create this intermittent term high going into Monday. So we had this swing high here, swing high to the left, and then we had this swing high to the right. And then if you look very closely, we have a London session optimal trade entry. So I was not awake for any of this. I don't trade London. And as a result of this very large drop down from London session, I actually sat out the New York session. So for me, I'm not saying it's the best thing for you, but for me personally, the best thing is to sit out the opening range whenever we have a very large London session like this. So as you can see, we traded up into a premium, but more specifically optimal trade entry. So this would be our 62% retracement level into what? This inverse, this old 15-minute gap. I'll show you on the lower time frame. And then also this hourly fair value gap. So what's the purpose of us trading up here? Well, it's bearish power of 3, so we extend out our opening, right? So this is our midnight opening price. You always reference this, and then you always recalibrate at the 9:30 opening. Very simple. So we get that premium retracement here into the inefficiency and above what? Buy side liquidity. You see the swing high right here? Let's drop down a time frame. And before I do so, I was using this inefficiency inversely. And then I mentioned in my pre-market analysis for all my Inner Circle members, I'll be watching this breaker as well. So I'm not going to have it on the lower time frames, but you can see we disrespected the breaker. So that was the first telltale sign that we're going to be going towards this sell side liquidity pool, right? So before I got on any lower, you can clearly see that we have very high probability draws in liquidity with market structure. And then we have these clean lows right here, way too clean. Lots of sell stops resting below there. And then right below this liquidity pool, we have this very large daily liquidity pool where large funds are holding their sell stops at. And we dip down into that as well as this liquidity void. Now, I say liquidity void because there is a difference between a fair value gap and a liquidity void. This liquidity void was created at CPI news release. Okay, so let's go ahead and drop down to the 15-minute time frame. And as you can see, we have this midnight opening price. Let me fix it. As you can see, very clear bearish power of 3. So we trade above the opening to do what? Accumulate short orders to the downside, right? We clear out these relative equal highs here, the buy side liquidity, and we trade up into this inefficiency. And we fail to get back to the new week opening. So that shows weakness, okay? So we aggressively gapped away from the Sunday opening and failed to get up there. Now, once we shift lower, we have this market structure shift above the original swing point that took buy-side liquidity, okay? Very important that this swing low is broken, because once we see that, that's a valid market structure shift in market structure. And then you see we get below that old, what is it? The hourly gap, and we trade right up into the low end of that. And we use that inversely, and boom, off to the races down to this sell-side liquidity pool and the sell-side liquidity pool down here. So, what in short, what is this? First of all, this is our classic purge and invert. We take out short-term buy side, right? And then immediately revert to what? Previous 3 days lows. So going over to ES, you can see very, very conflicting just because of how different ES and NASDAQ look. You see that NASDAQ took out this liquidity pool while ES is still the whole way up here, right? So a little bit conflicting. But nonetheless, I was still able to carve out a nice algorithmic scalp post the opening range, because I don't trade the opening range after a large London, okay? So let's go ahead and drop down to the 15-minute time frame. And right away, I'm going to bring your attention to Friday's low. So very important draw on liquidity. Okay, so previous day's low, swept in a discount. And then I was bringing all of my viewers' attention to this discount gap down here. I wanted to see how we acted, okay? Now, we overshot it a little bit, but that's fine. It doesn't have to have perfect precision, okay? So we're in a discount. We swept previous day's low and traded this discount inefficiency in these discount down close candles, which would be an order block, right? So we dug into that. Let's go on to the 5-minute time frame. Now look what takes place here. We have this 5-minute down close candle form, which is what? An order block. So this blue shaded area, this is this 5-minute order block here, and you can see that we shift above that at the optimal time of day. I'll get more into that on the lower time frames here. But we shift above this 5-minute candle. That's a change in the state of delivery. Where are my eyes jumping to? This inefficiency and buy side liquidity above here. We just fell shy of it. I was calling for this high in my Discord, but we just fell a little bit shy of it. Now, another reason why I was expecting this buy side liquidity pool to be rated is because, number one, we still have this remaining portion of the gap above it, and we have a very large regular trading hour gap left behind. And lastly, it's a Monday, and Monday, MASB setup, right, what I tell you guys, has a tendency to work both sides of the range. So we traded lower all morning. We traded the discount targets, very key discount targets in NASDAQ. And then what's we're going to do? At the optimal time of day, we'll anticipate some type of reversal to perform, and we'll be looking for the buy side liquidity where everyone is going to have their stops at, right? Very simple. So on my long today, what was I targeting? I mentioned that we had this 15-minute order block opening, so it's only a Monday. We already had a lot of action, so I wasn't trying to go for too much. I was just going for very low-hanging fruit. So this opening of the order block, yes, order blocks can be your targets. That's where you can be exiting. Very key specific point is the openings of the order blocks. Price draws to them like magnets, and so that's where my take profit was. This 15-minute order block, very simple. 5-minute time frame, change in the state of delivery. We create this intermittent term low here. So swing low to the left, swing low to the right. And then we're just going to waste no time and drop right down to the 1-minute time frame. So as you can see here, we had that change in the state of delivery above the 5-minute order block, right? We had this intermittent term low formed here. And then at the optimal time of day, this was very key for the trade to be taken. Let's go ahead and mark this out. So here we have our 1050 to 1110 macro. So, oops, spelled that wrong. But notice what happens. We didn't complete the move in the macro because typically within the macros is what starts the move. What was the purpose of the macro here? We consolidated below what? This short-term low where sell-side liquidity resides. So we accumulated these sell stops to then send it higher into premium arrays. What premium arrays? This order block, these fair value gaps up here, and then buy side liquidity. So we swept this short-term buy side liquidity pool, but we fell short of this one once again. Now, what was I waiting for? We didn't get the SMT that I wanted, so like we'd have a sweep here and then one of them would fail. We didn't get that, but we don't always need SMT. SMT is just another confluence. So I was watching and waiting what we did here, and I saw the macro did its job in starting the move, accumulating long the sell stops here to give us, to then propel it to the upside, right? So we finally get this meaningful displacement to the upside. So we have displacement and a market structure shift above this swing high right here. We come up, we match this buy side liquidity pool because lots of buy side will be residing above the short-term high. Everyone trying to chase the down move, right? And then what do? We retrace back down into number one, the high end of the 5-minute order block. And then we have this 1 minute fair value gap here left behind. So I was mentioning real time that I was anticipating this gap to predominantly stay open. So you can see that we just dipped ever so slightly down into that and institutional order folded and traded higher. As soon as I saw this higher movement, I was way more confident in my trade because whenever you see this signature right here, it tells you it's a telltale sign that we'll be trading higher. So the 5-minute order block coupled with this imbalance, boom, very simple entry technique. We have time of day, we have discount arrays traded to, right? And then we're targeting the opening of this order block here. Very simple. And I was knowing that we have buy side liquidity residing above here, and then a regular trading hour gap above, but I wasn't holding for that. I was knowing that it's a Monday and I'm just going for low hanging fruit. So I hope this helped in some way, shape, or form. If it did, hit the like button, and I'll be back live streaming tomorrow.